Nvidia's stock dropped as high as 5.1% on Thursday due to criticism. The stock continued its 4.3% decline. The latest inflation data and a report that a major artificial intelligence (AI) supplier would turn into a competitor were the main causes of the chipmaker's decline. The latest inflation report was the first element affecting Nvidia's stock price. According to the U.S. Department of Commerce's most recent data, prices increased slightly in September. The Federal Reserve Bank's preferred indicator of inflation, personal consumption expenditures, increased 2.1% annually, or at a seasonally adjusted rate of 0.2%. Both metrics matched the predictions of economists. The rate was 2.7% after excluding the erratic food and energy prices. Although an improving inflation reading is a good thing, it also raises the possibility that the Fed may decide to halt its interest rate cutting campaign when it meets next week. According to a Financial Times report, SoftBank is also reportedly considering using ARM Holdings technology to power a new network of data centers, purpose-built to train and run AI systems. Since SoftBank owns 90% of ARM, a move like this would put the business up against Nvidia, which dominates the GPU data center industry. Additionally, this would be a dramatic departure from the company's long-standing strategy of creating and granting licenses for its intellectual property. It's critical to stand back and consider the larger picture when discussing these two news stories. It doesn't really matter if the Fed lowers interest rates next week. It just affects investor mood because the economy is still on a lengthy road to recovery, which will undoubtedly lead to ups and downs. Furthermore, Nvidia's technology is ingrained in AI, and this is unlikely to alter anytime soon. It's also extremely improbable that ARM intends to bite the hand that feeds it, as the firm receives the great majority of its revenue from a select group of the biggest chip makers in the world, including Nvidia. Furthermore, Nvidia is still reasonably priced at about 33 times the anticipated earnings for the following year, especially when considering the potential that artificial intelligence offers. Microsoft and Meta shares fell Thursday despite reporting strong quarterly profits as the tech behemoths hinted at significant future AI spending needs and reduced growth forecasts. Despite significant investments in generative AI that had earlier raised investor optimism, the stocks of the businesses that have emerged as leaders in the AI area witnessed a fall. Key semiconductor and hardware providers' shares fell as a result of the adverse pressure that spread throughout the larger AI ecosystem. Broadcom declined 4.8%, Micron Technology sank 4.4%, Advanced Micro Devices fell 2.8%, and Nvidia fell 4.5%. Amid an ongoing dispute with its auditor, Super Microcomputer saw an even sharper loss, falling 15%. Investors now face even more uncertainty as the AI hardware startup faces the possibility of being delisted from the NASDAQ. Microsoft admitted Wednesday night in its third-quarter earnings report that it is unable to construct data centers quickly enough to satisfy the demand for AI. In a message, Richard Windsor, the founder of Radio Free Mobile, stated that Microsoft's inability to build data centers fast enough has constrained its guidance for the coming quarter. Microsoft CEO Satya Nadella stated during a post-earnings conference call with analysts that the company has encountered external limitations as a result of the high demand for artificial intelligence inferencing and training. Data centers are not created overnight, according to Nadella. For instance, in Q2, we had some problems meeting demand, or more accurately, our ability to do so, due to moving up external third-party items that we rented. That's what our limitations are. On Thursday, the IT Giant's stock was selling at $409 a share, down more than 5%. With an almost 2% decline over the last 3 months, the stock is on the verge of its worst performance in months. In an effort to stay ahead of its Magnificent Seven rivals, Facebook parent company Meta Platforms has made billions of dollars in investments in artificial intelligence. The IT behemoth cautioned that this expenditure will only increase in the upcoming year and beyond. During a call on Wednesday, CEO Mark Zuckerberg provided analysts a preview of some of those initiatives, but he said the business would provide more information after completing its budget for the fourth quarter. First, it's evident that there are numerous new chances to leverage AI advancements to boost our core business. which should provide a high return on investment in the next years, Zuckerberg stated. Thus, I believe we ought to make additional investments there. Second, he said, I expect to continue investing significantly in infrastructure, which is still a serious requirement for our AI investments.
We heard from Google and maybe what that signals that's ahead here for some of these other Mag 7 names. One of the big concerns going back to last quarter was the massive spending on AI. It certainly looks like, at least for Alphabet, that it's paying off. Are you expecting for that to be the case with some of these other big tech giants?
It's all about AI once again, Shauna. I'm speaking at a conference in Boston this week, the NICSA Asset and Wealth Management Summit, and the focus is on AI, alternative investments, and artificial intelligence. And one of the comments I made yesterday was that I see a bigger risk in underspending in AI than I do in overspending in AI. But we do need to realize that AI is a long game. And all of these CapEx spends that are taking place aren't going to necessarily translate into return on investment for quarters, if not years to come. So continue to look for those companies that are spending in this area, have a commitment in this area, because it will benefit them down the road.
So then, Kevin, it doesn't sound like you're expecting to see any signs of exhaustion of AI spending.
Oh, no, I still think we're only in batting practice of a doubleheader right now. We're going to see more and more commitment to this space and not necessarily realize the benefits of all that spending, once again, for years to come. But I look for different areas in the AI ecosystem that are benefactors of all this spending that's taking.
Who's an insider? I would call you 100% an insider in the way you're circulating in these tech circles and speaking with CEOs. What's on your mind? Because you said the AI, whatever it is, a revolution is still underway, right? Maybe it's slowing a little, but what are you looking for?
Yeah, I don't think it's slowing. What I think I'm starting to look for is when we can get a little bit more granularity. People want to see proof points. So Microsoft this week talked about the fastest ramp to a $10 billion business with Microsoft AI. I think the first sort of 8 quarters, there was like NVIDIA, and everyone else was it was a little bit hyperbolistic. Like, what are we doing with AI?
Yeah.
It was this narrative. Now we're going to start to see, we've seen IBM going quarter over quarter, 50% growth in its bookings for generative AI products. ServiceNow, I talked to Bill McDermott on earnings day. He's got this massive belief in multi-trillion-dollar opportunity. And as I talk to these people, what I want to hear is, how is this actually incrementally impacting your growth, not just kind of additive or an expectation of customers that are already buying?
Yeah. And you said you're hearing some whispers from many CEO conversations indicative of near-term savings and efficiencies.
I mean, you look at where the outcomes are coming immediately. It's the number of employees in the Silicon Valley right now, Nicole, same as in 2019. These companies are growing revenue, they're growing earnings, and they're doing it with the same number of people as they had 4 or 5 years ago. So if you look at that, that's clearly the first use case. But we all need to upskill. We need to find a way to keep our workers productive and excited. And I do think that will come. It's come in every technological revolution, but it's not obvious.
A recent analysis from Bloomberg Intelligence, BI, predicts that the generative AI market will expand rapidly, reaching $1.3 trillion in the next 10 years. In the medium to long term, the market is anticipated to grow at a compound annual growth rate, CAGR, of 42%, driven first by training infrastructure and then gradually shifting to digital ads, specialized software, services, and inference devices for large language models, LLMs. With the help of copilots that speed up coding, new infrastructure solutions, and specialized assistance, the growing demand for generative AI products might create an extra $280 billion in new software revenue. Over the next 10 years, the generative AI industry is expected to grow at an exponential rate, which has the potential to drastically alter how the technology industry functions. As the technology advances, it will become a more crucial component of cybersecurity, advertising, and aid investment. The field of artificial intelligence is still booming due to recent developments. Hiring Assistant, LinkedIn Corporate Communications' first AI agent, was unveiled on October 29. It was designed to do the most tedious chores for recruiters so that developers could concentrate on the most important job. Additionally, the business launched a new coaching function in LinkedIn Learning to assist students in honing their human skills through text or voice-based interactive scenarios. Additionally, Security, a leader in data security, privacy, governance, and compliance, revealed on Tuesday that it has incorporated NVIDIA's NIM microservices into its Security Gen Core AI solution. This allows users across industries to quickly and easily create enterprise-grade generative AI systems, copilots, and AI agents by securely leveraging proprietary enterprise data in a variety of data systems and applications. AI is also leading to important advances in the medical field. The biotech company Ambic Therapeutics announced the creation of a groundbreaking artificial intelligence model on Tuesday, October 29. The concept has the potential to drastically cut down on the time and cost required to produce new medications. Enchant, a new AI drug discovery model, has been shown in a white paper to have a high degree of accuracy in predicting how well a medicine would be absorbed by the human body. In an effort to lead the AI race, Asia is also making progress. A novel artificial intelligence technique to expedite quantum computations has been introduced by the Korea Advanced Institute of Science and Technology, KAIST. Using a convolutional neural network CNN model, the team led by Professor Yong-Hoon Kim of the School of Electrical Engineering has accomplished a first for the world, speeding up computations for electronic structure in quantum mechanics. When it comes to AI infrastructure, NVIDIA Corporation has been in the forefront. In addition to being the industry leader for AI chips, it has developed a whole AI ecosystem that includes networking, computing, and graphics technologies. The business controls over 80% of the market for AI processors and 90% of the market for data center GPUs. In light of constantly changing AI workloads and best practices, NVIDIA Corporation said on Tuesday, October 29, that it has created enterprise reference architectures, enterprise RAs, for constructing scalable, future-proof data center infrastructure. NVIDIA systems partners and joint clients can construct their own AI factories with the aid of enterprise reference architectures, which are detailed blueprints. For contemporary AI workloads, the NVIDIA Enterprise RAs will offer comprehensive advice on the best servers, cluster, and network setups, and full-stack hardware and software recommendations. They will be able to deploy AI infrastructure solutions faster and cheaper as a result. Companies will experience reduced complexity, scalability, and manageability, peak performance, expedited time to market, and security when they deploy AI workloads on partner solutions developed with enterprise RAs. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Yes, we have. So if you are looking at the last, say 5 days or so, we've been focusing on that 5,800 level as a key area of support. Obviously, we opened below that, and so we are now in negative gamma territory for now, which kind of means that we are seeing intense selling, and we might also have dealers also selling with that. Now, what's actually very interesting this morning, though, Oliver, is a lot of premium selling on the calls. I haven't seen the puts really pick up yet. Now, that actually can occur here in the next couple of minutes, next hour or so, but it didn't appear that there was a lot of put buyers getting into the market to start off the trading session for now. Now, we did have a key area of support, 57.75, that we really wanted to hold, broke through that. Now the next level to kind of focus on here today is going to be 57.50, and you want to see some buyers kind of stepping in. Just be mindful of, too, when you're looking at Microsoft, 410 is a key area of support, so you want to see some buyers stepping in. It's getting really close to that level. And then as well as Meta was actually getting a little bit of a rebound to start the pre-market session. Those are going to be the two key stocks that I'm going to be focusing on here today to try to give us a little bit more direction as to where the market's going to be going. But we are seeing intense selling pressure for now. This is not how you really want to open up the day, but let's see if we have some buyers actually stepping in and trying to reverse some of this initial move to the downside as the market opens.
Okay. The artificial intelligence boom's explosive growth and ongoing demand have propelled NVIDIA's stock to all-time highs. However, NVIDIA's stock has been under pressure ahead of its report on November 20, as earnings season brings with it a mixed bag of results for other Magnificent Seven stocks, including Meta Platforms, Microsoft, and Alphabet. Additionally, earnings are now available for Apple and Amazon.com. although Nvidia shares, which fell more than 4% on Thursday, are still very close to their purchase mark of 140.76. The stock's already massive run, nasdaq pressure, and Nvidia's impending reports all raise concerns about how to deal with the AI behemoth. Additionally, the stock just lost support at its exponential 21-day moving average. Investors want guidelines for both when and how to purchase stocks in the tumultuous world of Wall Street. Don't overlook the 8 secrets of selling and how they relate to Nvidia and other companies while keeping an eye on risk management concepts. Investors are the ones who are most familiar with FOMO, or the fear of missing out. Anyone who doesn't already own shares of a hot company like Nvidia is tempted to join the bandwagon before it goes away when it sets one record high after another. This may lead some investors to disregard tried and true stock buying guidelines without question. A third kind of fear, known as FOMU, or the fear of making a mistake, is experienced by investors who are already sitting on large gains in Nvidia, Meta, and other high-flying growth stocks. In other words, the dread of seeing those early profits drastically decline or perhaps vanish starts to clash with the desire for even greater gains. The stock of Nvidia is a good illustration. From its bottom in October 2022 to its record high in June of this year, the AI leader surged 1,202%. In May, Nvidia made a breakthrough from a third-stage base. Earlier this month, it broke out from yet another late-stage base after enduring a period of turbulence, which is typical when huge winners begin to age. There is higher risk associated with such later-stage patterns. By the time such a setup occurs, a stock has, by definition, already made a significant move. That does not exclude Nvidia from overcoming the pressure. It is now under and continuing to rise. It might very easily. However, investors should continue to be cautious about keeping safe and locking up profits when companies like Nvidia begin to sway and become more volatile following significant increases. Risk is increased by an impending earnings report. As always, sharing your thoughts and insights in the comments section can foster a more informed community discussion, helping everyone navigate the complexities of investing in this dynamic sector.